Welcome back to the Deep Dive. We're here to cut through the noise and really get to the heart of what's moving the needle in finance and tech. Today, we're zeroing in on a really interesting story, I think. It's about a company called Metallicus and, a pretty significant shift they're driving in the world of stablecoins. We're talking about pushing them right into the mainstream financial world. So our plan for this deep dive, we want to get you up to speed fast on what Metallicus is aiming for. It's ambitious. We'll dig into some really compelling details about how they're actually making it happen now and figure out what it all means for, the bigger picture of finance and for you. Okay, let's unpack this.
Yeah, it's definitely a critical moment. Now, a lot of you listening probably know what stablecoins are, right? Those digital assets pegged to something stable like the US dollar.
Mm-hmm.
But what Metallicus is doing here, it's kind of more than just launching another digital coin. It's not just the what, it's really about the how. How do these things actually plug into the existing financial system, the one that's heavily regulated? We're talking about building essentially a new layer of financial plumbing, something that takes the speed and efficiency of blockchain, but combines it with the stability and trust that traditional banks demand. So yeah, it's way bigger than just crypto. It's about maybe re-engineering the rails money moves on. Could unlock a lot of efficiency globally.
Okay, so let's start with the scale, the sheer ambition. Marshall Hayner, the CEO over at Metallicus, he's put this vision out there. It's huge, bringing the first $1 trillion of stablecoins on-chain. And just for context, right now, the whole stablecoin market cap is what? Somewhere around $130 billion, give or take?
Yeah, way below $1 trillion.
Exactly. So $1 trillion isn't just a big number. It's like a whole different league. And they're saying their community is actively building towards this right now.
Right. And that $1 trillion on-chain phrase, it's not just marketing fluff. It really signifies a fundamental shift. And the strategy to get there is where the real insight is, I think. Think about traditional finance. Banks, credit unions, they're naturally cautious.
Right.
They operate under really strict rules. So moving that kind of value, $1 trillion onto a blockchain on-chain, means you have to fundamentally change how those assets are tracked, secured, moved.
You're talking about using crypto proofs, distributed ledger.
Exactly, for an immutable, auditable record, moving away from those old school centralized databases. But the challenge isn't just the tech. It's navigating the massive regulatory hurdles and, frankly, the conservatism of a sector that values stability above almost everything else. So Metallicus is trying to bridge this huge gap, between the old financial world and the promise of blockchain. That's what makes it so challenging, but also potentially groundbreaking. They're not just trying to move money. They're aiming to shift the whole architecture onto something new, more efficient, more transparent.
Okay. That context definitely makes the how even more important. If the vision is that big, you immediately ask, how on earth do they plan to build this massive connected system? And their core strategy is pretty neat. Building these financial rails where, get this, every institution gets its own stablecoin and its own private chain, and then they link all these up through something called the Metallicus Digital Banking Network, or TDBN.
Yeah, that's the architectural linchpin, really.
Yeah.
And it hits a key concern for traditional finance head on. The idea of each institution having its own stablecoin, its own private chain, that's a game changer for them.
Why specifically? Control.
Control, absolutely. Control over their data, transaction rules, customer privacy. That stuff is non-negotiable for a bank or credit union. A private permission chain gives them a secure space where they set the rules, who gets in, who validates transactions, how data is shared. You get the security benefits of blockchain, but it's within a sort of walled garden that meets all those tough regulatory demands for data sovereignty, audits, compliance. It's often the only practical way, to get these conservative institutions on board. They just can't risk throwing all their sensitive data onto a public blockchain.
Okay, so you have all these individual private chains.
Right, and that's where the TDBN, the Metallicus Digital Banking Network, becomes absolutely vital. It's not just a brand name, it's the interoperability layer. The glue.
Like the universal translator or something?
Kind of, yeah. Think of each private chain as like its own secure lane on a highway designed for that one institution. The TDBN is the interchange, the common protocol, the language that lets these different lanes connect and swap value safely and seamlessly.
Without it, they'd just be isolated islands?
Precisely. Isolated islands of digital assets, each stuck in its own system, unable to communicate. The TDBN aims to weave them into a cohesive, scalable financial web, one that could actually support that trillion-dollar vision by letting these different institutional digital currencies flow across the network, while still keeping things private for each institution, but connected for the whole system. It's about creating a real network effect, not just a bunch of separate digital silos.
And what makes this so compelling, I think, is that it's not just theory. It's not a white paper dream. They're actually building this now. Our sources show it's moving from blueprint to reality. There's actual proof. Specifically, the numbers are pretty interesting. We're seeing 14 credit unions already live in their Stablecoin Pilot Program.
14 already.
And to speed things up, they've partnered with some pretty key players in that space, like the Goist Credit Union Association and Deal CUSO.
And those partnerships are significant.
Right. For anyone less familiar, a CUSO, that's a credit union service organization, is basically like a co-op. It provides shared tech and services to lots of credit unions. So it's a really powerful way to get broader adoption. These aren't small-time connections. They're plugging into established networks.
Absolutely. And that Stablecoin Pilot Program itself is, well, it's a really smart way to de-risk this kind of innovation for traditional players. The source material nails it when it says it gives institutions a risk-free way to explore stablecoin infrastructure in a regulatory-aligned sandbox without the need to custody digital assets.
That last part seems key, without the need to custody digital assets.
It's paramount, absolutely critical for a regulated industry. Imagine you're a credit union exec. You're curious about blockchain, but terrified of the regulatory heat or the operational headache of actually holding volatile crypto assets. So Metallicus provides this sandbox, a safe space. They can experiment with issuing, managing their own stablecoins, all within a compliant framework, but crucially, without taking on that direct custody risk themselves. It's insulated, designed for them to learn, test things out, build a proof of concept, and it's only for members of their Metal Blockchain Innovation Program.
So it lets them dip their toes in the water.
Exactly. Lets them get comfortable, understand the tech, build confidence before they jump all the way in. That's, a standard requirement for how institutions adopt new things. And picking credit unions first, also very strategic. They're often deeply rooted in their communities. They serve local businesses, individuals, and frankly, they can sometimes be a bit more nimble than the giant commercial banks when it comes to adopting tech that benefits their members.
Builds trust from the ground up.
Yeah, exactly. Proves the tech works at a local, tangible level.
In those partnerships with Goist and Deal CUSO, they're not just symbolic nods, they're accelerators. They provide a direct line to hundreds, maybe thousands, of potential credit union partners. They're using existing, trusted networks to scale up fast and get past that cold start problem you always have with new financial infrastructure. It's a clever way to roll out something disruptive through channels the industry already knows and trusts. Makes it much easier to swallow for a conservative sector.
Okay, so you have all these institutions, they're building their own digital assets, connecting through the TDBN, but there needs to be something holding it all together, right? A core element. And apparently, at the heart of this whole ecosystem, the fuel for these transactions is the metal dollar, or XMD, described as the reserve-backed index that anchors the network. Right, the metal dollar, XMD. Thinking of it as the reserve-backed index really gets to its function as the trust engine for the whole system. Because if you expect financial institutions to move trillions using stablecoins, you need absolute, unwavering stability and transparency. That's non-negotiable. So reserve-backed index means that for every single XMD out there, there are real-world assets held safely in reserve. Usually this means things like actual US dollar cash, short-term government bonds, other cash equivalents, things that are safe and liquid. This ensures the value stays pegged reliably to the fiat currency, like the dollar.
And this isn't just based on a promise, presumably.
It can't be. It requires robust, verifiable proof. Now, our sources don't dive super deep into the exact mix of assets or how often they're audited by third parties. But for any institution seriously considering this, those are the make-or-break questions.
They'd need ironclad proof.
Absolutely. Proof of the quality, the quantity of those reserves, and independent checks to verify it all regularly.
Right.
This focus on verifiable backing is critical. It's what satisfies institutional due diligence, meets regulatory demands, and separates it from, less transparent digital assets or ones backed by shakier stuff. It's that foundation of trust built on real audited assets that institutions need before they can move beyond just playing in the sandbox and actually integrate this into their core business. Without that transparency, the whole thing doesn't have the credibility to handle the kind of scale Metallicus is talking about.
Yeah, that theme of trust seems absolutely central. Metallicus even highlights it in their core value statements, like, made in the USA, powered by Metal Blockchain. backed by trust.
And those aren't just taglines, They're very strategic messages aimed right at the heart of what traditional finance and regulators care about. Made in the USA, for instance. That carries real weight, especially now.
Why is that so important?
Well, it implies operating under a clear, established regulatory framework, U.S. financial laws. That offers a level of clarity and predictability that's really attractive, both domestically and for international partners who might be nervous about unclear or shifting regulations elsewhere. It suggests a certain stability, adherence to known legal standards. That's vital for long-term infrastructure. Then, powered by metal blockchain. That points towards a specific, likely permissioned blockchain built for this purpose. For enterprise users, that suggests things like high transaction speed, predictable fees, governance. They can tailor things institutions need for compliance and operations. It differentiates it from maybe more public Wild West blockchains. That dedicated enterprise focus is key.
And finally, backed by trust.
Yeah, and that's the cornerstone, isn't it? It ties everything together. It's more than just marketing. It's about the absolute need for transparency, security, proven reliability in every single part of the operation. For these institutions, trust comes from seeing those reserve audits consistently, understanding the network's governance rules clearly, and seeing a real commitment to following regulations, all essential for something handling potentially vast sums of money.
Okay, so let's pull this all together then. We've talked about the vision, the tech, the partnerships, the trust factor. What does this shift actually mean for you, the listener, as finance keeps evolving?
Well, for you, this could signal things moving faster towards a financial future where your money moves quicker, perhaps cheaper, and maybe with more transparency built in.
Like faster international payments.
That's a classic example, yeah. Imagine cross-border payments settling in seconds instead of days. Or maybe accessing certain financial services becomes simpler because the underlying pipes are just more efficient, more connected. Less friction, lower costs potentially.
Yeah.
It's really about the fundamental architecture of money itself becoming more digital native. And that could spur all sorts of innovation in lending, in payments, maybe even new ways to invest, all stemming from this convergence of digital assets and traditional regulated banking. So it's not just some new digital coin, it's more like a potential new operating system for finance, one that promises to be more efficient, more accessible, and that could eventually touch everything from how you send $50 to a friend to how massive corporations handle global trade.
It's been a really fascinating exploration today. You definitely get the sense that Metallicus isn't just drawing up plans for the future of finance. They're actually out there laying the bricks, and getting those credit unions involved early seems like a really crucial step in building that foundation.
It really highlights this shift we're witnessing, doesn't it? Blockchain moving from being this sort of niche, maybe speculative tech towards something practically integrated into the regulated financial systems we use every day. It kind of challenges us to imagine a financial world where digital assets and traditional banking don't just exist side by side, but actually work together seamlessly. Driven by innovation, sure, but anchored by that absolute critical element of trust.
Absolutely. And if you're interested in following this story, seeing how it plays out, our sources mentioned checking out the Metallicus community. Apparently, you can find them active on Twitter Spaces, in their Telegram groups. Good places to follow this XMD story and get updates on how that Stablecoin Pilot Program is progressing. So as we wrap up this deep dive, here's something to chew on. If stablecoins, which are basically digital cash, are starting to find a home within traditional banking through efforts like this, what other core financial building blocks might be next? Could we see things like mortgages, corporate bonds, maybe even loyalty points finding their on-chain equivalent soon? And what kinds of new opportunities or efficiencies, or maybe even entirely new business models could that unlock for everyday users like you? Definitely something to think about. We'll be back next time to unpack more. Until then, keep digging.